Welcome to Wealth Up, a channel about personal finance and building wealth. The last few weeks in the stock market have been interesting. Depending on your holdings, you could have seen a significant decrease in your investments, with the market going lower day after day and seeing a very big impact in some sectors versus others. There are many factors impacting the market and contributing to how the market responds. If you are working on building your wealth, you likely have investments in the market. It is important to know that the market will have corrections periodically. A correction is defined by a decrease in the market of at least 10%. Here is an article from CNBC detailing the corrections since World War II. You can see the dates of the correction, the performance drop, how long it lasted, and how long it took to recover. You can see from the list that this happens every few years. Now looking at the average, corrections tend to go down 13.2%, it lasts 4 months, and it takes 3.7 months to recover. Of course, the amount will vary every time. What is important is to know that this will happen and the market will recover eventually. There is no need to panic, the value of the investments will come back up. This is only true if the fundamentals of a given company are still solid, and there isn't anything that has changed. This means that in your lifetime you will see many corrections, and it is something to become comfortable with. What you need to know is that after every correction, there is growth and the market has always returned to the old values. Also, even if there is a decrease in the market, you have not lost any money. You only lose money if you sell. Now that you know that the market comes back and it takes on average 3.7 months, there is no need to sell and take a loss. This is in general. Please do your own research for your specific situation. This is only my experience and my perspective coming from a random person on the internet. I am investing to build wealth and am in it for the long term. The way I look at the down market is as an opportunity to continue to invest. All of these investments are selling at a discount. It's an offer on these stocks or ETFs. I take that as a great opportunity to buy at a discount. If there have been any fundamental changes in a company and the valuation has not changed, this means that the company value is still there and fundamentally nothing has changed. This means that you are buying at a discount. Here is my strategy and what I have been doing. First, I've left all of my automated investments as is. I did not change anything. I also brought in money from my opportunity fund and bought in at the low prices. In the last 2 weeks, I've invested an extra $2,000 and have bought in slowly over these 2 weeks. I bought a few $100s per day. This is taking advantage of dollar cost averaging. The challenging part is that you don't know when you have hit the bottom until after the fact. Because of this, my strategy is, if the market continues to dip, I will continue to bring funds from my opportunity fund. I know that I am in a privileged place and have been able to create an opportunity fund. This is something that took time to build up, and creating a 1-year spending plan ensured that I could do this. Remember that many platforms allow you to invest with as little as $1. Even if you don't have an opportunity fund, you can invest as much as you can during these times. For a look into my spending plan, I'll link a previous video in the description box. This is not intended to be financial advice, but to share my perspective only. Do your own research. If you have found this video useful, be sure to give it a thumbs up and subscribe to the channel. If you want to see regular content, you can add me on Instagram at wealth_up. Thanks again for watching, and I'll see you in the next one.